In Boston, y'all still shooting up. In Queensbridge, stay shooting up. Even in Wichita, it's Wichita. You see a mic stand lit up under the spotlight, a silhouette of a man slaying beats that knock right. I treasure whenever niggas are rhetorical shit, orchestral tracks and nail it, smooth black velvet. The rap intelligence.
What's up, y'all? It's your boy Ace Boogie coming to you live with a special video lesson today. Today, we're going to talk about how to use pre-market as a guide to price action. So, more specifically, we're going to talk about the ticker TRIL and its recent run up, and we're going to go into more depth on how to analyze the price action and how to, build trading plans accordingly due to it. We're also going to go over mistakes I made trading it. I actually traded it for a loss, and how you can use my mistakes to, learn and overcome and be successful in your trading. So here is the Trill daily chart. As you can see, you know, back here in early December, it was really doing nothing. And towards mid-December, um, it actually started gaining some volume and some momentum. And that's no coincidence. This is when all the biotech stocks started to heat up around mid-December. So Trill being a biotech stock, it's no different. It caught, momentum as well. But towards the end of December, it's been trading at, higher highs. And most recently, it had a breakout over this 174 area, 174, 175 area, which led to a big up move for 2 more days before, of course, reversing and making this first red day. So I'm going to talk about Trill some more. So important factors that led to that big move. Um, Trill had news, had a news catalyst on January 7th, followed by a first green day on January 8th. So January 7th was this date right here. And the news came out on this day. And the next day, it basically had a first green day and had decent volume. But more importantly, was what happened afterwards. On January 9th, Trill broke out over the most recent highs, which was that 175 area. So it had a major daily breakout over this day right here, January 2nd. So when it broke out over that zone, that area, it really had, big momentum upward afterwards. So some of the statistics we should identify is Trill, has about a 20 million float size, which is not low float. It's not crazy big either. It's pretty moderate, and that's according to Finviz.com. And like I said earlier, Trill is in the biotech sector, which is the hottest sector in the markets right now. So that's something to keep in mind um, when trading. Um, when you trade in general, you want to know what sectors are the tickers you're trading in, and you want to ideally be trading, stocks that are in those hot sectors because they'll lead to the biggest moves. So what I did on my trade with Trill, um, I traded it for a loss. I traded on January 10th, which was this day right here, and I took a L on it, but it's all good. I stopped out. It was a planned area where I was going to take my loss if it didn't do what I wanted to do. It got down to that area. I cut it off, simple and plain, no biggie, nothing to get emotional about. Specifically, I entered in at about 329 average, and my goals were, try to sell around $4. Um, and looking back, my goals were more than moderate. You know, I should have had more conservative goals, being, what I know now in hindsight. So I cut my loss at about $3.15 after adding, a few hundred additional shares at my entry price. So I think I had like 1,200 shares all in all. But, you know, I saw the stock hit resistance. I saw it. I even said it out loud, man, it's hitting resistance in the 360s. And it hit it multiple times. And, what was going through my head at the time was I was thinking, the longer it sticks around the 360 area, the more likely it would squeeze, squeeze over that. And then, once it gets, above 375, then ideally it's going to go to $4 and I'll be at my area where I wanted to sell. But here's what I didn't consider. Um, well, what I failed to consider at the moment. The stock was already overextended. It was up over 80% from its most recent base of consolidation. So let me show you what this looks like. Boom. So here's the most recent base of consolidation was right near that $1.75 area. So when I was buying it at 329, way up here, you know, its most real recent area of solid support was down here in the 170s. So that's it's pretty overextended at that time. It was also trading on the third consecutive green day. So we'll look at that. At the moment, the stock was green up here whenever it was up, but it was the third consecutive green day when I was trading that. And the most recent significant news was 3 days old. Remember, I said it had news on January 7th. It did have like another news blip on the 9th, but it was basically analysts talking about why it was up, which was basically reiterating the news that happened on January 7th. So I didn't have a new catalyst as well. Um, and lastly, price action was screaming resistance, and I failed to react and adjust my bias. So those factors, being up from its most recent area of consolidation, being that it was 3 green days up, and the news was on this day, you know, that move was basically almost done for. So that's something that I didn't consider. But cool, check out the bright side. Even though I took a loss on this trade, there are multiple lessons to be learned here. Um, there was a moment that I was up and I had failed to take those profits. When I bought it in the 330s and it was trading around the 360s, I was up 30 cents a share. That was decent profits. It was over 8%. So, I should have just took those profits. And you gotta learn not to be greedy and to take what the market's giving you at the time because the market's not going anywhere. You can always re-enter, but take advantage of the opportunity that's in front of you. So take your profits while you have them. If you're up, ideally 8% or more, and the stock isn't or stops doing what you wanted to do when you wanted to do it. I thought the stock was going to continue up to $4. It stopped doing what I wanted it to do it at like the 360s. So I should have just took my profits at the 360s. Just ride the wave. When the wave crashes, you got to get out. Um, Going along with that, read the price action and adjust your plan. I wanted the $4, but once I realized that, resistance is saying, hey, we're stopping right here, I needed to adjust my plan and react. You don't have to wait until your stop is reached, to get out. If the chart is telling you that momentum is changing, it's best to just be fluid and change your plan to maximize your gain or to minimize your loss. Another thing to take note of is you want to be aggressive early on in the move, like on the first green day or the initial breakout day. You know, when it's 3 days in and, the news is 3 days old, you got to be more quick to take these profits. Basically, the same thing I'm reiterating. It all falls back in line. You got to be more conservative whenever the stock is that overextended. And lastly, you want to use pre-market price action as a guide to trade the market price action. And I'm going to show you exactly what I mean. And this is what the lesson is fundamentally about. So here's a chart, a 5 minute chart of TRIL during the pre-market hour. So from 4 or 5 a.m. all the way up to 9:29. So as you can see, you know, from the jump, whenever it opened up around this area, around the 3:10, 12 area, and it came down, it sold off a bit, but it held support multiple times in the 290s. You got to note that in your head. One, two, three, four, 5 times it definitively held the 290s. So keep that noted in your head. The next thing I see on this chart is once it breaks out over these pre-market highs, which was this area right here per se, that's when the volume really came in. It pushed up for a good 10 minutes. And then once it pushed up into the area of the 360s, that's where the resistance was heavy. It sold off quick up here. You see the wicks at the top, that represents the intensity. It gets up here and it sells off quick before this 5 minute candle's done, and did it again on this candle, and it made a lower high as well. So that's screaming, hey, there's resistance right here, and this area is going to be, a wall as of right now. Here's my trades. I bought it with like a 329 average. Um, like I said, I could have sold right here, sold right here. I had really 10 minutes to sell, but I waited, and then when it came down here, and it actually bounced around 325. I added some again because I thought I was gonna do a retest, kind of like a VWAP dip buy type deal. It didn't do that. And whenever it started to break down over that 315 breakout area, which I thought was significant support area, that's where I sold. I didn't feel comfortable waiting down to the 290s from the 330s. That would have been way too much of a risk to hold on that. So I cut it off right here. But definitely key thing to take away is support in the 290s, resistance in the 360s. You have about 70 cents of range from here all the way to here, and that's about a 25% move. So we're looking to capitalize moves, 8 to 18%. We can easily get 8 to 18% in between this range ideally. So so let's take a look at the market when it opened. What did it do? All right, so just reiterating some of the stuff I was talking about. First thing to notice is how well the support is held in the 290s, all of the pre-market leading up to the market open. Second thing I noticed is the mini breakout over the 315 pre-market highs. That's the note, or I'm sorry, note that is the moment where volume came in pretty big. And in my head, I was thinking this could be a nice little intraday support area above red green. Next thing to note was the long wicks as the stock tried to break the 360s area for about 10 minutes. Those two long wicks. So definitely keep in consideration the characteristics of how the stock is trading, especially the key support and resistance zones. Basically everything I just said when I was looking at the chart. All right, so this is what happened when the market opened. So when it opened, it popped up a little bit and it basically sold off. It dipped down, But look where it did down to. It did down to 295, support in that 290s area once again. And once it showed that it wasn't going to break under the 290s at that moment, um, dip buyers came in, short sellers covered, and buying pressure was on. You see the big buying volume candle. It pushed all the way up to the 360s or even to the 380s, um, and eventually the 390s. So my thesis selling near four was kind of correct, but I didn't play it the right way. I wasn't meticulous enough with my entries, and I got stopped out. But look where the resistance begins. Resistance begins in the high. I put 260s, but in the high 360s, right here. That's where the body of the candle kind of stops, and that's where the wick starts. So that pre-market resistance right here, 360s, is the same area right here, whereas that resistance is coming into play. So using that support in this resistance as a guide from pre-market support and resistance, you're able to identify a high probability odds trade. If you're buying near support in the 290s and you're selling somewhere between there and the 360s, it's the same amount of range, about 70 cents of upside or more. In this case, it was more. It squeezed up a little bit higher than the 360s, but it's still about 25% of range between the lows and the highs. So that's something incredible. This is a good tool to have in your arsenal to be able to look at the price action pre-market and determine the range and use that and apply that as a guide for the market opening. So very important lesson here. Hope someone can be better off with that knowledge. So reiterating what I just said, look how the support area is almost spot on, holding in the 290s. It's important to note that TRIL would have been a great dip buy at the 290 support area with intentions on selling at the pre-market resistance, which is the high 360s. Using this, the pre-market range, we're able to determine as a guide to the actual range it may trade. That's the overall concept of this video lesson. One thing to keep in mind is it doesn't work 100% of the time. Trading is an art, not a science. So you need to manage your trades and be ready to act accordingly. But this particular setup, or not setup, this particular guide, I've seen this happen, this price action repeat multiple times since I've been trading. So definitely something to keep in mind. With that being said, thank you for watching this video lesson. Hope to put out some more. If you have any questions, um, shoot me a message on YouTube, Twitter. Handles AceBoogie2488. And I am out.